Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It is October the 2nd. This will be our chart lesson for the day. And a couple of housekeeping things before we get started today. I will be taking vacation Wednesday, Thursday, and Friday this week, so no chart lesson on those days, and no mid-morning chart posted on the website either. So just be aware of that. I would also ask that Wednesday through Friday that you not send me any emails, uh, any questions, stuff like that, because I'll have, if I don't do that, I'll have 150, 200 emails by the time I get back, and I just won't have time to go back and answer them all. So unless you have an emergency, obviously if you've got some kind of emergency need, feel free to email me and I will check my mail from time to time. But if you would just hold any questions or anything like that until I get back, and we'll start back then. So it's helpful for me. It's just simply because they build up, and then I get, I try to answer them. I feel like I need to answer them, and I'll be 2 weeks behind on for, it'll take me 2 weeks to get caught up. So if you don't mind, just hold your emails, questions, and stuff, unless it's emergency. If you've got an emergency, feel free to contact me. But if it's just a basic question about price action or a chart or something, I'd just ask you to refrain and hold it till I get back. So thanks, I appreciate that. And just get to the chart lesson. Just a range day today. Really, you could call this an uptrend. We traded it up, had a little correction, and then we had another leg up. So the bias was basically up for most of the day, although you could trade this both ways. Notice how we're above the EMA and then we're below and then we're back above. So you really had three trends here. You had a trend up, a trend down, and another trend up. And so you could trade it both ways depending on which way that trend was. Early on, it looked like it was going to be just strictly a tight range day. It looked like this was going to be a failed breakout, but we didn't get back to the lows. When we turned up here, you want to measure that first leg, just like so. Drag it over and look for a measured move. And you can see we went slightly higher than that. So that's great. We're already at 27 points ahead of above the 2,500 level, and just a few days ago we were bouncing around 2,500. Now we're 27 points higher. So this market just keeps going higher, and who knows where we're headed, how long? But for now, we're still in a bull market, longer term, and we're still making new highs. So it's just the market that won't quit. But the other way I would measure it is, here's your overnight highs and lows. Of course, I use the closes most times. Measure that, drag it up, and that would have been my secondary target. And you can see we found some resistance right in there before we pushed up a little bit higher right at, actually this is after the close. I think we closed right in here, right near this. So that would have given you a perfect target before the close. So anyway, let's talk about the trades and we'll wrap it up. I'm leaving early Wednesday morning, so I'll still do a chart lesson tomorrow, but probably be abbreviated because I need to go home and get packed and get everything ready. I'll start tonight, but I'll still plan on having a regular work day tomorrow for the most part. But nothing on Wednesday, Thursday, or Friday. And I'll be back next Monday. But anyway, let's talk about the trades. First trade I saw was 7 o'clock I came in. We were trending down here and testing this. And we made a new low here. And then we tested it once, tested it twice. So there's your double test rule. You got a fairly nice signal bar there off these lows. Look how many times you've tested those lows. But there's your double test rule of that. And really, you probably could have looked at this like a double test of this area, but this is not a very good signal bar. So you want to wait, and then when it tests it again, it gives you this fairly bullish bar. I like that one. It does give another test, and really the only reason I like this one with that more neutral to bearish signal bar is that it's not only another double test of a little bit, one tick lower, but it's a failed second entry short because that's a new low, first entry, second entry. And so it's not a very good signal bar, but if you're looking at it like a failed second entry short and Another test of look how many times we tested that low. We're probably going to go higher here. Um, but because it's not a perfect signal bar and because it's somewhat going sideways there, I did make it green. You're better off to wait on that reversal pattern. And look what happens. It pushes up through the EMA. It tests it once, twice, and that's a double test of the trend line and confirmation of it. Uh, this is a new low. Basically, that's a double bottom, so that's a failed second entry short. We're probably headed higher now. That's the best place to enter. That's your that's our bread and butter entry, and look at it take off. And it comes back again here and bounces off the trend line, but it's right into those highs. You got a doji and then another inside bar, so you really can't enter there. And then you get a little breakout pullback long off the trend line, but again, it's so close right into that double top. You're a good bit away from the EMA at this point, so you're better off just to skip that. And notice what happens, it overshoots. I didn't draw my trend line high enough really at that point, and I haven't extended it, but this should extend on up like so. And notice you get that overshoot right there. Let's just bring it down, replace it there. And notice you get that overshoot there, so you got to be real careful on this. It's looking like a range day. This is probably going to be a failed break higher. Look what happens here. You got a new low, swing low here. First entry short, second entry short. That's a fairly bearish bar. I like that. Looking for a second leg down. I mean, that's obvious. That's one leg down. That's the first close outside. You might have still been interested in a retest of the high here, but this looks more like a range day at this point, and so I'm thinking failed breakout here. And look, if you go all the way over here, this is looking like a failed break higher, and so you're just looking for a lower high, and that's what you get right there basically. And it's a second entry short. That's a fairly bearish bar. It didn't close on its very low, but that could have easily ticked up either way on a tick chart. So just go short right there, and you're looking for another leg like this one at a minimum. There's leg one. And there's leg two. And we went a little bit further than that. So, and then you get your, notice what happens. It pushes down, pulls back under the EMA, tests that trend line again, gives you your third touch. That's your confirmation, another bearish bar. I like either re-entering there or adding on, or if you're not in already, entering there, and just looking for that measured move at a minimum. And maybe we come all the way back down to the lows. Quick, easy scalp out of that, but it comes back and breaks your trend line here. It retests. It's a test of this breakout area. Fairly bearish bar. I don't really like that when it's a first entry. You draw your trend line here. That's the first break of it. But when it comes back and tests that breakout area again and gives you that big bearish bar, I like that one. But the only problem is now you've had a break and you're right into this little double bottom here, and it could go a couple of ticks lower or even a tick lower and bounce. In this case, it would have worked, but it's a little bit aggressive, so I wasn't crazy about it. It does work, but that doesn't mean anything because next time it probably won't work, and you'll say, you'll beat yourself up for not taking it this time, and then next time you take it, and guess what? It fails. And so if you follow the rules and you didn't take this one, no big deal. You did the right thing. So now you got a break. A new low, you actually have two legs down to a new low, and then it reverses. It goes right through the EMA. Let me get this out of the way. That was our arrow showing our measured move. I don't know why I put this line in here. Sometimes it does that, but that's just the close is not till over here, so I don't know what that is. But anyway, you push right through, you pull back, and you bounce right off that trend line. And notice what it did is that's that midline. That was the previous high. That's probably going to be a midline if we go higher. And it tests it several times, and then look at that big bullish bar. So I like that one just to go long. It's like a little breakout pullback long, but it also, there's your one touch, then you come back a second. So that's really like a third touch and confirmation of that trend line. And you got to figure prices are heading up to test this high and maybe a measured move or maybe another measured move based on this leg here. So it's a little bit aggressive because it's not really a perfect setup, but there's some reasons to like it. So I did mark it green. It would have got you in this trade. You're better off to again wait on a double test or failed second entry short. But notice what happens. You're moving all the way up, and that's your first break lower, and that's really your second break lower right there, and that's the first time it went higher, and you got a fairly decent bar there too. So that's a failed second entry short, and there's probably some people going to be trying to pick tops here when we know we're probably headed to at least test this high and probably this measured move or maybe another leg up, a measured leg up. So I like that one. Once it didn't go any higher, it didn't matter. I probably wouldn't have entered any more here, but at least not off of that play. I would have drawn a new trend line, but it's after. It's probably going to look more like that. If you drag it up, you can see that fits pretty well. So this would have been the first break, and you might have risked that one to another high. But anyway, it's after 2 o'clock, so there's really no other entries there anyway. And that's what I saw today. Not a lot of trades. We actually still getting some movement. We're still trending upward. And so if you were able to catch one of these entries, you probably got a nice ride up. But you really didn't have a hard time getting into this next leg up. So you only got one real decent entry, and the other one was a little bit risky there. So, I mean, this one is really not super risky if you saw all the things I talked about, the push through the EMA, the fact that this midline was holding here and we bounced right off of it with that big bullish bar. So, but if you didn't see it that way, that's probably a risky trade. So, third touch and confirmation of this trend line working up. But just a so-so day. I did read something. I saw something come across my screen. I think it was on Friday, and it said that this was the lowest volatility month in the history of the ES. And so we've been complaining about how slow it feels and how lack of trades and how there's just no real volatility and no real movement. And you know, I knew I couldn't remember it feeling this slow ever before, and so that just, when that came across my screen, that pretty much confirmed it. This is the lowest volatility month September was in the history of the entire ES. So that tells you something, you know. I don't know what it tells you, but that tells you that it's not our imagination that is slow for certain, but it's probably telling us something. So I'm not going to try to guess what it is. I'm going to follow the price action, and wherever it goes, that's where I'm going. But I think there's some warning signs out there. You know, who knows? This thing could just suddenly. One thing I can tell you is that the longer a market is dormant feeling, when it breaks out, the harder it goes and the faster it goes a lot of times. So that could mean that, hey, once we get this rally rolling again, it may shoot off like a rocket, or it could mean that we're setting up for a sell-off sometime soon, and this thing's going to sell off and the bottom's going to fall out of it. The key is it doesn't matter, and we don't want to try to guess. Somebody sent me an email the other day, and they were saying, you know, I saw this, this, and this, so I was suspecting that this was going to happen. And I'm like, no. Don't try to guess where the market's going to go. Once you've done this long enough, you will actually start to be able to look at the type of price action and have a good idea what the day is going to turn out like. But don't trade based on that. Still, you know, if it looks like it's going to sell off and we're going to get another leg down after a little correction like this leg down, or another leg up like this leg up, as long as you've got a trend line and that's what's working out, then go for it. But don't just start buying down here because you're thinking you're going to get another leg up, because what will happen is this thing will keep going down and you'll get burned. So we don't try to guess where prices are going. you will get good enough at this where you can read it and have a good idea where it's going, but we still don't want to trade on that. We just want to use that to our advantage to say, hey, if we suddenly get a reversal pattern, like right here, if this thing comes up about halfway down to 70% down and reverses, I'm going to look for a possible another leg up, because I know that's what the prices do a lot. But before I start wanting to trade long again, I want to see this break of this trend line working down, a new low, and or some kind of reversal trap or something, and then a trend line going in the other direction. Then I'm going to go the other way. But I'm not just going to say, hey, if this, I'm going to start buying right down here because I expect this is what's going to happen. I hope that's clear. Uh, to most of you, it probably will be. To some of the new guys, that might be confusing. If it is, don't worry about it too much yet, because you got a long way to go before you want to start thinking like that anyway. But yeah, I get those kind of emails from time to time, and people say that I was expecting this to happen and something else happened, and I got burned. Well, you should never get burned, because you always want to have your stop in place. The worst happens is you take a loss and you back out and you reevaluate and you start over again. So don't be trading based on guessing, because when you do that, you're gambling. And gamblers do not make it in this business. We want to bet on, we want to take trades on pretty much sure things. And if we're reading the price action right, we can get the odds on our side, and we're trading with the odds on our side, and we're not guessing and gambling. And I can tell you, if you want to be a gambler, this is the wrong business to be in. Go to Vegas or whatever. Just keep your head down after what happened out there. If there's any our followers out there in Vegas, our prayers go out to you. It's a horrific thing that happened, and I still can't believe that there are people that would do that to innocent people. But wow, we just live in an evil world sometimes. But anyway, I didn't mean to get off on that tangent. But the fact that I mentioned Vegas made me think about it. So, but yeah, if you want to be a gambler, maybe you want to go to Tunica, or I guess you can pretty much go anywhere to gamble these days. But if you go to Vegas, keep your head down. Anyway, I'm going to wrap it up. We'll be back again to do it tomorrow, and again, we'll be wrapping up our week tomorrow. No other chart lessons this week, or I'll be on vacation, so after tomorrow. But anyway, I'm going to wrap it up. We'll be back tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.